Hi, this is the RITE Report program, and I'm your host, Chris Angle. I'm the author of 4 books on philosophy, and they're available free for viewing at the philosophicalangle.com. Along with me is my colleague and co-host, Rick Samuelson. Let's get rid of this stuff. Rick graduated from Yale and has MBAs from Wharton and Tufts and is an independent venture capitalist out on the West Coast. And approximately once a month we put out the report of the state of the stock market and the economy. Good to see you, Rick.
Good to see you. Merry Christmas.
The program uses as its basis for the RITE Report, it's a natural outcome of a book I wrote, The Philosophical Equations of Economics. And since the major components of this, of any transaction, economic transaction, are risk, time and effort, information and knowledge, we think that the RITE Report gathers various types of information from the business community, and we make a prognosis of the direction of the stock market through the use of, as investors will use, the various information that come to them. So the RITE Report was created, and let's go over the current edition. But before we do that, we're going to show you that the RITE Report has some efficacy and is rated in the top 10 of the newsletters in the United States that are tracked by a company called Timer Digest. And so let's start with the current RITE Report, which came out on December 10th. And again, you can see that at the full report at stock-market-direction.net. So first we're going to go over the macroeconomic snippets, and that came in the month of November and the beginning of December. And first is from the KC Federal Reserve, and they report that the government debt is to rise to 98% of GDP in 2020. In September, the world trade grew by 2.1%. Personal income decreased by 0.7%. And the U.S. Census reports that sales of new single-family houses is down 0.3%. The Bureau of Economic Analysis reports that the DPI decreased 0.8%, and the BLS reported that Bureau of Labor Standards reported that average hourly earnings increased 0.1% over the month in October. It also reported that non-farm payroll employment rose, and the unemployment rate declined to 6.9%. The U.S. Census reported that U.S. retail food services sales had an increase of 0.3%, and it also reported that U.S. total business sales were up 0.6% from last month. The Chicago Fed National Activity Index increased 0.83% in October. The real gross domestic product increased at a rate of 33.1%. That's kind of an amazing jump. U.S. Census confirmed that new orders for manufactured durable goods in October increased 1.3%. Privately owned housing starts were up and 1.9% above the revised August 2020 estimate, and profits increased 27.1% at a quarterly rate in the third quarter after decreasing 10% in the second quarter. Corporate profits increased 3.3% in the third quarter from a year ago. And consumer spending increased 0.5% in October. And real PCE increased 0.5%. And we include this to understand the direction of the European economy also, and it's projected to the Dutch economy is projected to grow in 2020 by nearly 3%. U.S. Census reports that total construction activity for October 2020 was 1.3% above September. The Bureau of Labor Standards reported that total payroll employment rose by 245,000 in November, and the unemployment rate edged down to 6.7%. The Conference Board Employment Trends Index increased in November. And so, taking a look at the summation of positive versus negative snippets from the news, we notice that the positive snippets were 75% predominant. So that's pretty good news. And so now we're going to go turn to the economic analysis of, we use a bunch of economic indicators, and we're going to go over that now. And the first one is the high yield bonds. They were up over this past month from 85.23 to last seen on the 7th of December at 86.81, positive. The select dividend shares were positive, and the Purchasing Managers Index points to the economy is expanding with a rate of 20, and their rate was 27.9, which is anything over 50% is positive. And the IHS Market Purchasing Managers Index was also up 56.7. Construction spending was up 1.3%. Unemployment, we use 4 different indicators within the employment index. So the unemployment has decreased to the unemployment rate has decreased to 6.7%. The civilian labor force participation rate decreased to 61.5%. That's a negative. The employment population ratio was also negative, going down, decreasing to 57.3%. And the Employment Trends Index put out by the Conference Board increased, and so that's positive. So we got 2 positives and 2 negatives, so we're going to give that a neutral in our computation here at the end. The Bureau of Labor Standards also showed us that productivity increased 4.9%, output increased 43.5%. That's pretty amazing. The productivity increased in manufacturing sector 19%, and in the manufacturing output increased 54.8%. Surely a very positive note. From the U.S. Census Bureau, the quarterly financial report indicated that tax profits in the second quarter were down from the after-tax profits of $113 billion recorded in the first quarter, and down $89 billion from after-tax profits recorded in the second quarter. So that's a little bit quite lagging, but nevertheless we use it, and that's down. That's a negative sign. Surely that'll pick up in the third quarter. Retail sales are positive this month, and with an increase of 0.3%. Manufacturing and trade inventories and sales, the combined value of distributive trade sales and manufacturing shipments for September were up 0.6% from August and 0.8% from September. A very key indicator from the which is the Industrial Production Index put out by the Federal Reserve in St. Louis, ticked up, which is to 103.2054, and the velocity of money, also put out by the Federal Reserve, ticked up. Two very important indicators. New residential construction was 2.8% above October and November, and the Conference Board leading economic indicators were increased, and the coincident economic indicators increased. Great positive news. New residential sales was up 0.3%. Oh, nope, I read that wrong. Is down 0.3%. So we're going to put that in the negative category. Advanced report on durable goods is increased 1.3%. Existing home sales from the National Association of Realtors increased 4.3%. And the real GDP, as we mentioned above in the snippets, was up 33.1%. Personal consumption expenditures up 0.5%. Personal income down 0.7, that's a negative. Consumer confidence index also declined, and the restaurant performance index, although it's not expanding industry-wide, it is, however, from last month showing up 0.2%. So we're going to put that in the positive news section. The corporate profits were positive here, as reported by the Bureau of Economic Analysis, and manufacturers' shipments, inventories, and orders. New orders for manufactured goods in October increased up 1%. World trade volume grew by 2.1%. Great news. Chicago Fed National Activity Index was up 0.32% in September. The Housing Price Index was also up 7.8%. So we had 23 positives, 4 negatives, 1 neutral, and which is pretty good. So judging our domestic political risk, because we're going to put it at -2 because the Georgia Senate race has not been confirmed, or has not happened, which will be in early July, and be able to determine who controls the Senate. So with that, there is some risk out there that we do not know yet. So we're going to put that as a -2. Corporate taxes were cut a couple years ago, so that's great. Regulations have been decreasing, and that's great. Government is making a large investment in viral research, and so the production of knowledge is good. The technical analysis of the stock market, we're going to put it as a +3. Market's recovering from a previous correction. And the general business and economic snippets, as we noted above, is pretty good at 75%. And so our economic indicators that we just went over, we had are pretty good too. So we're going to give our RITE Report Strategy Index we're going to report that as having inched up to 76%. And So that's improving, just a slight increase over last month. So in summary, the RITE report concludes that in spite of the market suffering a devastating downturn from the epidemic, it is now recovering due to the positive business and economic news, along with positive developments in medicines, treatments, and vaccines for COVID-19. Additionally, the RITE Report Strategy Index edged up, and as such, the RITE Report expects the market to continue recovering and proceed to advance to new highs. So we're going to recommend to stay long. So with that conclusion, we're going to check with Rick and see what he thinks about this the total market outlook. What do you think, Rick?
Well, I'm long, so actions speak louder than words, I suppose. I think there's going to continue to be huge sectoral divergence. If you're in commercial real estate, or you're in the hotel business, or you're in the airline business, life looks pretty grim. If you're a restaurateur, I think 100,000 restaurants have gone bankrupt already this year on that order. Again, that looks pretty grim. So selected sectors are still really struggling. Obviously, unemployment is elevated. On the positive side, that suggests very little wage inflation on the horizon. We may have some imported inflation because the dollar is weakening against particularly Asian currencies, where we frankly get a lot of our stuff. I think the biggest risk in a Biden administration will, of course, be more regulation, particularly in the energy sector. Will they drive fracking out of business? Will they drive the oil companies out of business? Maybe not, but they will certainly impede profitability in that sector and perhaps some others. Other sectors look really, really strong, and I think margins are going to increase. Did I read somewhere that every employee that stays home instead of going to the office saves the company $10,000 or $15,000? I think that model is here to stay. I think a lot of people will be working from home and will prefer it, and certainly the tech sector and other sectors. So that's encouraging. That will boost margins over time in at least certain sectors. So I think you're seeing a recovering economy in the classic sense, coming off of a steep decline, bouncing back as one would expect. But you're going to see a kind of sectoral rotation in the economy, by which I mean certain sectors are going to benefit mightily and continue to do so. Other sectors are going to lag. And I think getting to the full employment days of the beginning of this year is going to take time. The rate of hiring is slowing. Unfortunately, I think concern about increasing regulations in the event Biden assumes the presidency, and I suspect he will, are going to cause companies to hesitate to invest, at least in certain instances. So it's positive, but a bit mixed.
Rick, what do you think about the election for the Senate, 2 seats of the Senate in early January? If it goes to the Democrats, what do you think will happen? Will they have a significant influence on the stock market this winter?
Yes.
What do you think will happen?
I think the stock market will correct significantly, because they'll be in a position to ram through tax increases. They'll be in a position to ram through packing the Supreme Court if they want. There are a number of things they could do They may not do all of them, but any of those things would, I think, cause the stock market to quote unquote take stock of the situation.
Do you think it will actually happen that if they were to get control of both houses of Congress, do you think that they would be bold enough to raise taxes, and especially particularly corporate taxation?
Yes, well, Biden's already promised to do that.
Okay. And if not, if the what do you think that the chances are that the Democrats would pull off taking both Senate seats? What's the probability of that?
I think it's unlikely. I think the Republicans will get at least one, probably Purdue.
Okay, and that would save the
Yes,
really the future of the stock market in the
yes,
first half.
yes.
Okay, well that's a great relief to hear, and thanks for joining us for the December RITE Report, and we'll see
Thank
everybody
you.
next month.
All right, thanks. I'll see you later.